My name's Kevin Robert. I'm 24 from Halifax. Right now, I have two duplexes that are pretty much stabilized, one with a partner, one solely. I really like the mortgage world. It's a lot of ups and downs. It's just a lot of putting out fires here and there, but top three, one of them has to be surround yourself, with other investors that are doing what you want to do. That's 100% the biggest thing.
What's some of your lessons you've learned or some things that you would have done differently?
I think starting out, I probably would have.
Hello and welcome to another episode of the Refined Real Estate Podcast. I'm your host, Ian, joined by my co-host, Manny. We are real estate investors. We're based out of Halifax, Nova Scotia. We've done a bunch of stuff here, and now our main focus is investing south of the border in Cleveland, Ohio. If you guys stay tuned on this episode, you will hear our guest, Kevin Robert. He is a co-worker of mine at the Blake Wilson Group. He's a mortgage broker, and he has 4 units at 24. So we'll dive in a little bit more on that and how he got there, how we all met, and what his plans are on the future. Following that, we're going to jump into some of our USA updates and some of the cool stuff that we have going on there. If you guys are enjoying this, please give us a like, a review, a follow, or share with a friend. We're just trying to grow this network so more people can learn that how we got our start and what we're doing to build wealth, preserve wealth, and just live better lives. So hope you all enjoy this episode. We will get into the interview with Kevin Robert. All right, guys. Well, we're going to kick off our interview here with Kevin. So, Kevin, why don't you start with how we all met, and then we'll get into what you got on the go now and what you got going on in the future. So we'll start with an intro from you.
Yeah, sure. So my name's Kevin Robert. I'm 24 from Halifax. I met Ian and Manny. Ian through a podcast episode he was on many years ago. He was just flipping homes at that point. Didn't have any bigger multi stuff as he does now. But I was a young university student, so hearing Ian's story and about how he was in the market, kind of where I wanted to be or get to, I reached out to him and just set up a quick meeting. He was happy enough to meet with me and kind of chat through things. So we got connected, and he ended up starting a mastermind podcast meetup kind of thing every week. And that's where I met Manny as well. And it kind of just took off from there. They kept doing bigger things, and I was sitting in the university library listening to them. So eventually, I got into the market after just being around them for so long. And here we are today, a couple properties, and now I'm a mortgage broker. So.
Oh, that's great. Yeah, it's so funny looking back on some of those earlier days when, all of us didn't really know what real estate was about, but we just stayed together. We kept going down all these different rabbit holes of like Airbnb and house flipping and getting into multis. And then Janelle and I started buying some around here. And then obviously Manny and I moved down to south of the border and are buying there. So no, that's great. So maybe walk us through what some of the projects that you either have on the go or are close to completion.
Yeah, right now I have two duplexes that are pretty much stabilized, one with a partner, one solely. At the moment, I'm really focused on my mortgage business, so I haven't been actively looking for real estate for myself so far this year, but I plan to do something bigger, hopefully in later in the year, if not just another duplex for myself to live in. Where I'm pretty young, I'm not really focused on settling down, but it would be nice to get something in the HRM just for future reference, I guess.
No, absolutely. So, maybe walk us through how you found those deals that you first purchased, and give us some information on that.
Yeah, both of those were actually on market, but the thing, originally I wanted to get in like a duplex, triplex, quad, the house hack. It's the classic story to get into real estate, and the best method in my opinion. And I know you guys kind of feel the same way. I found these, like the first duplex I found was on market in right after COVID, and I benefited from that timing because everyone was kind of used to COVID prices, but they in that time right after COVID, you weren't getting it because interest rates came up. Sales were down. There was less competition, so I got really lucky and got a duplex in Truro. It was listed for 375. I ended up closing on it for around 290 grand. It was vacant, so that was the how I got into the market. Ended up living in that for a little bit, renovating it, turned it over in a couple months, and then I went on to do a next one almost a year later with a partner. Similar story, on market, vacant. I jumped on it right away, but at that point, I didn't have any real money to put down and actually do the renovation. So I had to look elsewhere for that. And knowing, the network I have and what we've kind of learned together, I was able to find a partner for that and do that with no money. So a joint venture, classic 50-50 structure. And yeah.
Oh, that's great. And what's some of your lessons you've learned, or some things that you would have done differently?
I think starting out, I probably would have tried to get into. I say I try to get into something bigger at the start, but you do want to learn like from the bottom. So when it comes to the capital raising side of things, I really wish I would have filled my well before I was thirsty, as you say.
Yeah.
That was one of the biggest things I learned was that I don't want to be, I guess, just running around with like a chicken with his head cut off in the last 11th hour of financing conditions to get a deal closed. So doing that earlier is going to help me with these future projects where I need the money up front.
So would you say now that you're half looking back into the market, are you doing much in the way of digging that well?
I haven't really been looking back into the market right now, to be honest. Like I jumped in full as a mortgage broker. So that's really what I'm focusing on. But that also allows me to, build some connections that I wouldn't have otherwise. I network just as much as I did before, if not, 10 times more. So I think that'll really help when I do start looking a little bit more. But these connections, I guess, building them now, going to kind of utilize them later when I want to get back into the market and raise some money.
How are you liking the mortgage world? You seem to be all in.
Yeah, I really like the mortgage world. It's a lot of ups and downs. Like it's just a lot of um, putting out fires here and there. But I found that it's more thrilling than any other role I've ever had. It's kind of you control your own success. So that's what I like about it. I'm allowed to I can work whenever I want, and I'm passionate about it because I know that what I'm putting in is actually benefiting me versus just benefiting a big corporation.
How do you find the mortgage world is right now with just the environment of interest rates and how banks are for investors or just, single family buyers? Like, is it busy? Like, I know during COVID, it was bumping, like everything, real estate agents, realtors, or mortgage brokers. But like right now, you're getting into it when it's like a tougher time, right?
Yeah, I would say it is a tougher time right now. With the spring market, there is like just like the sun comes out and people want to buy real estate, so there's some more activity. I'd say as a newer broker, I had a little bit of a tough time at first, but that's why joining a team where there's lots of activity is good because I've been able to get a piece of these bigger deals. So I still am seeing like a lot of activity. There is a little bit more challenges with rates where they are. You guys know in Halifax and Nova Scotia with investment properties themselves, making those numbers work in terms of a lender's eyes gets a little bit harder. So that's where the creativeness comes into it. But there's definitely more activity and there's I see some growth in this role for me for sure.
No, that's
No,
awesome.
that's awesome.
Are you working with
So
more?
what would you say your next
You go ahead,
oh,
Ian. I'll grab the next one.
okay. I was gonna say, so yeah, what do you foresee in the real estate market these days? We think interest rates are going to be around the same. We fully suspect that they're going to come down. What's your take?
Yeah, I don't think they're going to come down as soon as they expect them to. Um, just from seeing all the data on the back end. But I do think we'll see a slight drop at some point here soon. I'm hoping for it because one of my products is variable, so I would like my cash flow to get bumped up a little bit. But yeah, I don't think it's going to for anytime soon. But hopefully by the later end of the year they'll cut them a little bit.
Do you have a preference, Kevin, to work with people buying their own personal home or investors buying rentals? Do you care? Or you'll just any client's good, but like you must have like a slight preference.
Yeah, I mean, I like working with investors because I mean, as you guys know, that stuff fires, fires us up. Like I like seeing those deals, and I like um, seeing how people can get creative. But there's something different about helping like a first time buyer get into their home. It's usually like in terms of a mortgage side, with the work that I do, it's pretty quick and easy if people are just a normal, 9 to 5. So there's pros and cons to both sides. I like helping like my fellow peers, but I also love to see investors grow. So I'll do a little bit of both, but yeah, it's hard to pick one to be honest.
I guess I have another question. This can go to you too, Ian. It must get tough sometimes when you get the numbers for someone trying to buy their single family home, and you guys run the numbers for them, and they're pre-approved 200 grand, 150 grand, and they want to buy something in Halifax, right? It's just like their finances just are not in order, whether it be credit, how much cash they have, all that stuff. It must be a tough conversation to tell them, hey guys, like you're not even close to the ballpark of being able to buy what you want to buy. Do you have that tough conversation with them?
Yep.
Yeah.
So I know, yeah, for me, for example, I recently did one for, they both made good money, but one was kind of in between jobs. The other one was self-employed and not for 2 years. And once you start hitting off some of these check or I guess criteria that the banks don't like seeing, it starts making things a lot more difficult. So it's like, yes, we could still go get you a pre-approved, but you are not going to like that interest rate. So it's like, a bit of a give and take. And like, it sometimes works out where, you have those cookie cutter lenders where both partners are working, making good money, low debts, all that stuff. And you're like, oh, life's easy, whatever. But then you get those other cases where, yeah, you get people that are self-employed or in between jobs or whatever, they own too many liabilities. That's when it starts getting a little bit more challenging. So yeah, so that's for, I guess, for that. So I've done both commercial, I've done residential. I prefer the commercial by far, because there's more levers to play. There's more ways to look at a deal. There's more ways that you can get creative and push things through. Whereas for residential, yeah, it's a lot more. You need X, Y, and Z. Otherwise, it's going to get really expensive. So,
Will someone get pre-approved for a higher mortgage, but then the interest rate will be very high, or will it be a lower mortgage and then a regular interest rate? Is that a thing? Like, will there be a balance between the two, or no? Not really.
kind of. So from my way of looking at it, like you could go do like, so you have all of your A lenders out there, but you also have your B lenders. So like your home trust and those types of banks. So and this is, I guess, more so for self-employed people. So again, that's something that I resonate with, as been my path for so long, that you can get into these programs that are like a stated income. So they're not even really looking at your taxes. They're looking at, okay, how much do you make? And then they back that up with your bank statements. And now you can get away with saying, oh, we put $500,000 through the company last year. I could reasonably conclude that I made $200,000 on paper last year. But if you look at what they actually are claiming in taxes, it might be 30, 40, $50,000. So it's like, yes, I can go with a B lender and do a stated income. So all my income requirements are fine. But then again, your interest rates are a lot higher. Your loan to value is a lot different, and all these other factors. So it's not like a clear this side of the spectrum and this side of the spectrum. It's like, yeah, you could try and check these boxes or go into these boxes.
Gotcha, man. Good on you guys. I don't think I could do it.
It's hard, I think, when it comes to like delivering that kind of news. I've only been in the mortgage industry for a couple months now, so I have, I guess, limited experience in this. But so far, like just delivering that news, it's hard to not feel like the bad guy when obviously we're not the ones that are like, you don't make enough money. You're like, we're not talking down to them, but that's how people see it sometimes, even though we're just, kind of the middleman to be like, no, this is what we need to do, or no, you can't do this, unfortunately. So So yeah, it's a little bit hard when it comes to that sense. But like I said, it's high highs and low lows, I guess.
Yeah, no, that's great. So I guess what's your next few years look like, Kevin?
I think now that I'm kind of getting a bit more stabilized in the mortgage space. Um, I'd like to continue with that, but I think I'm in a very good spot right now where, you know, our team itself is starting out their own little development firm over here, as you know, Ian. So I'm really trying to get, on the boots on the ground to kind of see how they're doing that stuff, and then eventually I think I'd like to do some development kind of plays in Nova Scotia. Um, at the same time, I think that's the only thing for multifamily investing here if you're going to try to get into the multifamily space, because I can't go buy an existing 12 unit right now and make it work, because you guys know just where you're in Cleveland now. It's just the numbers don't make sense. So I see a lot of value in the development space. So yeah, that's what I want to explore over the next few years, and ideally, start to look at other avenues as well. Maybe it's the States, maybe it's self storage. So yeah, that's probably what my plans are.
No, very interesting that that you say that because I had some. I love value add. Was able to successfully pull it off here in Halifax, but as we've mentioned on this show before, like it's just not scalable with all the rules and regulations, the tenancy laws, the way the government's doing. Even CMHC is on you for that. Like they don't like seeing that you just went in, you kicked out a bunch of tenants and put in new tenants at double the rent. They will delay being able to like refinance you until you have that asset stabilized for about 2 years type deal. So there's ways to do it, but again, it's just getting harder and harder. Even though I enjoy that process, I like polishing up because as we've mentioned before, like, we can go buy a building in Cleveland for, a couple $1 million, but to build that new, you'd be 3 times that cost, 4 times that cost. So that's something that gets us going. But yeah, to make money here in Halifax or anywhere in Nova Scotia, development, like yeah, there's definitely an avenue to do that. It comes with its own challenges and it's a whole different process. But it's nice to be able to have like a blank canvas of a building, and you can set your rents from day one what you want them to be, and you have a little bit more control over there. So yeah, no, that's interesting that you say that.
Some of the more advanced investors that I know, they've shifted over to new build. Like new build and the United States. It's like just those two things for those exact reasons that you said, Ian. For one, there's a lot of the government's. We talk down on the government a lot here, but they are doing a lot of little things to incentivize building. They understand we need housing, and developers, whether it be building single family homes or semi detached, small multis or big multis, we need housing. So anybody that gets into the development space, I think it's great. Like you said, for one, less capex, less maintenance, all that stuff. Everything's new. You can sell that thing in 15 years, and it's still going to be a pretty new building. Top of the market rents, like Ian said. Development is beautiful. I think it's a very sexy play. It's you have to know what you're doing though. It's like almost you want to partner up with a builder or something because it's more expensive to get into, all the fees, the timelines, everything. It's an advanced skill. I wouldn't advise just like a new investor to go into development on a whim unless you just have boatloads of cash. But like if you're working with a mortgage broker that's working with developers that knows how the game works, then that's an awesome thing. And I think when you dive into that world, man, give us a shout because we can help you raise cash. We'll do what we got to do. Development's sexy, man. I love it, and that's the only thing that I would do in Nova Scotia too. To be honest with you guys.
Yeah, that's the thing. It's just like the avenues here start to shrink. There's not as much opportunity, and the development, like you said, like we're used to seeing 100-year-old homes here. So selling a development 10 years after it's built, you're still going to get top market value for something like that. And yeah, there's just more incentive to do that versus buying an older building and bringing it up to market rent. So
Like Ian, you saw this building in Dartmouth that we were going to look at. That 40 odd unit one. That was going to be a lot of work, and it was half of the unit count of this building we're buying in Cleveland, and I'm sure whatever this guy's final sale price will probably be twice what we pay. And it's going to be so much more work and a headache. And it's just, man, it's tough. And we were ready to tackle it because we kind of lowballed the guy, but we offered him what he was worth, but no one's buying things for what they're worth. They're buying things for future value. They just have cash and they're just putting it in places. And that's not a good strategy for investors.
Maybe again, once with a different clientele or further established or that type of stuff, yes. So Alfonso, I guess that we used to have, like, yeah, he went through the stages, and I think that might be something that we'll go through a little bit further down the road. Like right now, we're looking for high returns. We're looking for big value add where we can put a bunch of money in, get all that money out, and away we go. Whereas in the future, it might be, yeah, let's do something way less risky, like a new development where investors aren't going to get all their money back anytime soon. It's set the money there, forget about it, and build equity a little bit slower. You don't have as much, forced appreciation on something. It's just not as high returns, but it's just a more stable project. So it's like something down the road that certainly could see myself in. But yeah, we're going for way bigger jumps in value. We're trying to buy things for $4 million, put $2 million in and have it worth $8 to $10 million. But it's like we got to do a lot of work. We got to do a lot of forced appreciation. We got to be on the contractors. We got to do all this stuff, opposed to like a development where, yes, it's a lot of work out the front, but then it's just set it and forget it, leave a lot of money in it, maybe get a good chunk of it out. So yeah, different strategies for different phases in our life. But no, that's interesting that's where you want to go.
Man, the new build's about capital
it's just,
preservation.
it's hard to,
right? That's what it is. And you're gonna have a whole lot of wealth when you get into that world, Kevin.
Thank you. Manifesting that for sure.
No, that's great. So I guess, Kevin, anything else? Maybe you chatting back to yourself 4 or 5 years ago, what sort of advice would you have for yourself?
See, I've been asked this question on another podcast, and I think looking back, like I don't know if there's that much that I would give myself. Like I think I did the right things. It's hard with the world where it is to see and not look online and be like, crap, I only have 4 units and I'm 24 years old. Like, what am I doing?
I had zero.
Like,
I had 0 units at
yeah,
24 years old.
that's what I mean. So I think looking back, like maybe not advice, but I'd just tell myself that things are going to work out, and keeping up with what you're doing will get you to where you want to be. Because even at 22, I was like, damn, I don't have any real estate yet. Like, what am I doing?
At
But I was
22.
in university, pretty much. So yeah, maybe not advice per se, but just like words of encouragement that things will work out where they're supposed to be.
No, that's awesome.
Let's finish off strong here. What 3 pieces of advice would you give any new investor getting into real estate in 2024? Top 3.
I would top 3. One of them has to be surround yourself, with other investors that are doing what you want to do. That's 100% the biggest thing. I attribute to where I am today, even at only 4 doors at 24. And then 2 is probably just to, live below your means, I'd say. Um, it's a hard economy. And if people are, out there trying to impress other people by, buying a new car or going out and spending a bunch of money on fancy dinners and drinks, it's not going to get you to the point where you can invest in real estate when you want to, I'd say. So that is a big one. And then 3, just house hack something to start off. Get your foot in the door. Doesn't have to be anything big. Move to Truro if you want to. Buy a duplex. Live in it. You'll get some equity that way, and the experience is well worth it. So, yeah, I'd say you should house hack first of all.
That's great advice.
Yeah, that's awesome, Kevin. Well, listen, we certainly appreciate your time. I'm sure our listeners do as well. Kevin, where can people find more information on you?
I'd say just reach out to me on Instagram or check out my Instagram if you want to. It's Kevin Robert Mortgages. I also have a website at kevinrobert.ca if you want to check out that stuff. That's a little bit more about mortgages. The Instagram's more real estate focused in general. So yeah, send me a message if you're interested in chatting, and we can talk some real estate.
Perfect. Well, thank you, Kevin, and we will see you soon.
All right, thanks, guys.
All right, Manny, what did you think of the episode with Kevin?
Man, I enjoyed it a lot. Kevin was one of the top guys on my list that I wanted to have on our pod. Just, I love seeing young guys just getting after it. 24 years old. How long? We've known Kevin's at least 4 years, right? Since the start of COVID. So, like,
Yeah,
he was in this space of real estate since he was 20. And he bought his first couple buildings over the
yeah,
past couple of years. But, like, he knew he wanted to get in this world in university. And I think that's just unbelievable because in university, God knows what I was doing, man. And I wasn't thinking about buying multi units. I didn't think about any of this stuff until I had my degree, until I started working. And then I realized the 9 to 5 working until you're 60 life sucks. But this guy knew from the get go that he's like, I don't want that life for me. And he started buying real estate at a young age. So I think if any young person listens to this podcast, they will be highly motivated by Kevin and they'll just really appreciate his journey.
yeah, 100%. I remember when he first reached out, and I was like, "Yeah, this is a cool guy," and that was right around the time when we had our little like book club, but listen to real estate podcast. Yeah, Kevin was there every week. He just like ate up everything everything real estate wise. Like yeah, he's got a real good head on his shoulders, and yeah, he's going to be a really successful dude. So yeah, it was great to have Kevin on. So yeah, hope you guys enjoyed that, and I guess we'll get into some of the updates on our 97 unit down in the States. So we had some kickoff calls with our lenders. Obviously, we've been chatting with them quite a bit, but more so just our brokers down there. So now we've actually started discussions with the actual lender that's going to be doing the deal with us. Yeah, we've had multiple meetings with our accountants, our lawyers, all this stuff. We actually came to a corporate structure so it's a GPLP structure. In Canada, which owns a GPLP structure in the States, which was supposed to be owning an LLC that was going to own the asset. That in that LLC, a percent of that was going to be owned by the GPLP and all the way up the chain. The lender actually came forward and said that they are not happy with that structure and that our only two fixes was to add more people to the LLC or to create a corporation out of Delaware. And they went in depth on why. I won't bore you with the details, but basically, yeah, some of the corporate structure down there is pretty crazy. We're getting into higher level stuff. Some people like hearing about that, but yeah, so we're just back and forth with our lawyers a little bit more and trying to come to a structure that's happy with it, that makes everyone happy. So yeah, doing that, and then as well as just continuing to dive in on the due diligence, have some engineers ready. They actually looked over the building in the past, so it was nice to have someone that's a little bit more familiar with it. So we're getting them through to again check over the roof, the elevators, the boilers, the everything there, to see if there's anything that needs to be fixed outside of what we have in our scope of work. But I think again we're still pretty conservative. We've got about 2.5 million set aside for just capex, renovations, all that good stuff, which is actually going to be. We have the option to have all of that funding through our lenders, but again, to reduce some of the risk and not to be over leveraged, we're actually planning to put a good chunk of our money that's going to be raised towards those funds. Manny, am I forgetting anything?
No, man, I think you hit it all on the head of the nail there. It's we're definitely well along. The due diligence is going quite well. But yeah, man, it's a lot. It's a lot more than people
Yeah,
understand. From the outside looking in, it might be simple, a bunch of guys getting together, raising cash, buying apartments, but the intricacies of what's going on, it's a lot. But it's great. It's cool. I'm enjoying it all. We're learning lots, and I'm sure it'll just get smoother and easier as we buy more and more buildings of this nature. But it's been quite the ride so far.
yeah, no, absolutely. So no, I think that will do it for us today, guys. I again hope you enjoyed our interview with Kevin. We'll be back next week with some more updates on our 97 buildings south of the border, as well as some other interesting news for you guys. So thank you again. Again, please like, subscribe, follow, all that good stuff. Really means a lot to us and allows us to hit a bigger audience. Yeah, we actually reviewed the analytics for some of our podcasts now, and it's crazy. We've got listeners now spanning all over the world. We're in Australia, we're overseas. It's pretty cool to see all that. So we just want to continue that growth, and yeah, appreciate you guys listening. And again, any questions for us? It could be big, small, anything like that. Please don't hesitate to reach out. My Instagram's Ian_Armour. Manny, yours is
Shift Properties. I'm thinking about changing it. I'm thinking about just making it my name. To be honest with you. Anyways, that's another conversation for another day. But yeah, it's Shift Properties at the moment.
perfect. Well, awesome. Well, thanks again, guys, and we will see y'all next week.